Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for November 6th, 2022. I want to thank you for sitting in and listening in. And if you're like, oh, I missed you last week, I missed you too. I want to give a big shout out to Greg Horvat, who did last week's video. You can see him right here on the Forex Analytics team. He conducted last week's video because something special happened over here. Over at my neck of the woods in Arizona, one of the co-founders of Forex Analytics, he came to visit, and he and his family, his wife and his son, came in to visit, and we took him to the Grand Canyon. We took he and his family trick-or-treating. We even went to Las Vegas, Tombstone, Arizona, and all the things that you would expect to do if you came to visit here in the United States. So it was a really nice trip, and that's where I've been for the last 10 days. But guess what? I've also been trading, and you know, if you're in the Forex market, you're in Forex Analytics, you already know that. We've been broadcasting not just myself in my home studio, but Steve has been next to me every morning, getting up with me at 0 dark 30 to broadcast with the team and give his thoughts on the markets. And if you don't know how we do that, make sure you go to our webinar page on Forex Analytics so you can listen to the free flow show with Steve. Sometimes joins in there, but Stelios, Ryan Littlestone, and K-Man all join you in the morning in the European hours. And then for us North Americans, we have the F.A.C.E show. It's free every day. Just make sure you log in and listen, so this way you get my updated views each and every trading session. We actually did a live, which normally we don't do. We did a live FOMC event for our Forex Analytics traders. It was awesome. Matter of fact, I'll talk about a little bit about that in a minute. But let's talk about this week's price action, and let's start off going back into the FOMC, and I'm going to be updating the charts since they are flying back to Greece. So if you're in the Forex Analytics community, you see my updates throughout the course of the week here in the basic technical analysis, and all of my charts here, and then other team members also contribute throughout the course of the week. But the weekend, Steve does a lot of the analysis. I'll be doing it this weekend. So if you're a Forex Analytics subscriber, you're going to be reading my thoughts. All right. So I haven't updated those yet, so we're just going to go into live charts as of right now. But I want to talk about, like I said, the price action following the Fed. At first, we saw the U.S. dollar weaken a bit, and I think the market started to anticipate that there might be a peak in rates. And then when the Fed Chairman Powell, and let me go over to the dollar index really quick, and we'll focus in on more of the intraday stuff. So when the Fed Chairman Powell, kind of reversed course during his press conference, you saw the dollar really start to strengthen, because he said, whatever you were thinking, and he was thinking rates would be at in the last meeting, they now anticipate them higher than that. And at first, and really for the next 24 hours, the dollar really rallied going into the jobs report. And then following the jobs report, I think the higher unemployment rate, I said unemployment claims, unemployment rate really sank the dollar, and we saw stocks rally and the dollar slump. Now, what you're going to notice with the dollar index is we've got this descending channel. Now, overall, this isn't bearish. This is really kind of a bullish consolidation. However, I do believe if we get a solid break and maybe a sustained break below, let's just say, this channel support, because it would be then taking out all of these previous highs, consolidation, we start breaking really below 109 in a big way, then you're going to see the dollar index slip back towards the 200-day moving average. But right now, based on the information that we have, especially in front of the inflation data this week, you have to assume at this moment, at least the first half of the week, we're still seeing a consolidation in the dollar index. So if the dollar index gets back towards 110, 109.50, I would assume that this channel provide some support. What's going to drive us below this level right here is what happens on Thursday, because we have the oh so important US CPI data coming out on Thursday. It's on Thursday. I know some of you, like me, I was actually thinking, wait, wasn't the data on Wednesday? No, excuse me, it's actually on Thursday this week. So Let's pay attention to that. Now that's going to be the highlight of the week. So what I want to do is I want to take you through a few of the really critical, I think the critical developments that are happening this week. We also have Veterans Day holiday that's observed in the U.S. at the very end of the week. We also have the Marine Corps birthday. Those of you that are Marines like myself, happy birthday, Devil Dogs. That happens actually the day before Veterans Day, but that's not a national holiday. That's just a me thing and a Marine thing. So just don't mind us. But Veterans Day is going to be on Friday, so the markets might be a little light as far as volatility goes. Now, before I get into all of these charts, because I want to talk about gold, I want to talk about crude oil, I want to talk about some of the currency pairs. I'm actually going to focus really in on Thursday on the inflation data, because right after that we have the Mexican Banxico interest rate decision, which I think is going to be really important as we go into this week. But before I do that, I need to mention the sponsor of today's show. That's going to be the Trader Funding Program. So if you want to learn more about the Trader Funding Program, you can go to forexanalytics.com. You can just go to the Trader Funding Program, click on this video. It's a 2-minute video. It'll explain exactly how you as a trader can access our funds and not take any of the risk and keep 75% of the profits and join the Forex Analytics community as for a certain period of time based on what plan you decide to do. See, this plan is great for traders that really want to learn, well, first of all, you may not have access to a $50,000 trading account, or maybe a $250,000 trading account, or maybe a $1 million trading account, or maybe you do and you just don't want to risk your own money. This is a great option for you, so make sure you check it out. I want to show you because it also gives you access to Forex Analytics itself. And more importantly, is you don't have a time limit to pass your assessment, which you do have to take an assessment to see if you qualify to trade our money. But inside of that, you get to go into the Forex Analytics community. This is probably one of the most dynamic trading communities around. This is just some conversations that happen on Friday. More importantly, there's like a trades room where people like me, talk about, oh, I'm short the dollar going into this weekend. We closed out some trades, and it's not just myself, it's other traders too. So check it out. Check out the Trader Funding Program. If you want to really enhance your trading, or you want to take your trading to the next level, check us out there. All right, let's go back into what I was talking about as far as next week goes. And I want to cover a couple of the major currency pairs really quick. First and foremost, I think we should look at the dollar, because this is the previous channel that we are looking at. Because we've been on both sides of this trend line because of last week and the volatility following the FOMC, what I'm going to do is I'm actually going to delete that. I'm actually going to delete this trend line here, and we're going to delete this trend line, so that channel is really not relevant to me anymore. What's relevant at the moment, if you're looking at the euro, is more of this ascending channel. Now, yes, we're in a descending wedge, or a descending trend, or a bearish trend. But what we should note is that we're in an ascending channel right now. Now you'll notice this green line. What's the importance of that green line? Well, the importance of that green line is that was the breakdown point from the previous lows from 2016. So any rally in the euro, if we continue down this path, let's just say for the next, I'm drawing it out here, like let's say for the next couple of months, right? We just continue to grind higher. You see risk grind higher. Maybe the euro grinds back towards 102, 103. This is probably going to be a great place to be on the short side of the euro. Are we going to be there right now? No. Are we going to be there this week? Chances are, unless inflation has just fallen off a cliff and you're seeing something that I haven't seen, which could totally happen. Maybe I'm super out of touch as far as inflation pressures go. But in case I, have been like an ostrich and I've had my head in the ground, let's say that's a huge miss going Thursday. Yeah, we could trade up there theoretically. Right now, I don't believe that that's the path this week. I think we're, probably going to trade in this ascending channel as we make our way higher over the course of the next, couple of weeks. However, like I said, any move back up towards 103.20 or so, 103.50, somewhere in that neighborhood, I think is going to be a great opportunity to be on the short side of the euro, back in the direction of the trend, probably in the coming weeks. So for with that being said, you probably want to be buyer on dips in the euro down to 98 cents and a seller back up at 102. Pretty simple stuff, but I think it's worth noting why we've stopped where we stopped. It's a big 127% extension of this last, the several years of a range. We hit, back below parity, and I think we're just floating around parity for now. And I think you can trade both sides of this market. Now, one of the things, if you look at the sterling has really, had a big rejection right here around this is the 116 level, 116.50. That's going to be big. I mean, if you're a cable bull, you definitely need to get back above there to change the course of the sterling. And if you look at this, descending trend line, by the time, if we get back up there again, it is going to be challenging that trend line again. So my opinion is you have to get above that. If you're a sterling bull, if you're a cable bull, you want to see that rally really follow through. That's where it's going to have to be. You'll notice that there are buyers on pullbacks. I mean, I think you could. Unless something crazy happens, which, hey, we're talking about the UK, things can't. At the rate that they cycle out prime ministers, I mean, crazy things can happen, obviously, in the UK. But you can see people are now buying dips, and I think a lot of the market got wrong-sided, shorting the sterling, thinking that we're going below parity. So you are seeing that dip buying coming in. We are making higher highs, or higher lows. So we are holding the 38% retracement. You can see that really significant retracement level held. That's right there. And so as long as that continues to hold this week, I think that's going to be really important. That comes in at 111.50. That might be a number you want to jot down. One of the other big developments I think you should note as of Friday, we saw this Canadian dollar reverse, and we saw it wasn't just the employment data out of the US. It was also combined on Friday the employment data out of Canada. So when you have numbers that drove the market like that, you have the Canadian employment. The headline number was 108,000 or something like that, and it was a blowout number. The market was only expecting like 11,000. Now, if you look at the population of U.S. versus Canada, then extrapolate that in numbers, that's a huge beat with Canada. Also, unemployment rate dipped. So naturally, if you get dollar weakness and you get a strong Canadian number, boom, there you go. You got a breakdown. Now, what's most important about this chart is, yes, if you've been looking at it, it is a head and shoulder pattern. And the one thing is the spike high right above here really gave us the clue over the course of the last few weeks. We have a couple of traders in our community, some people from our team, some of our team members that have been identifying that. And to be honest, it's been a great call. And guess what? It looks like we've got further to go. Probably back down, if we do play this completely out, back down towards 130. I even had Mark Chandler from Bannockburn Forex. He actually reached out to me on Friday, and he was like, "Man, this head and shoulder pattern could really, take hold." And something we were talking about privately between the two of us. Most of you know him from CNBC or Bloomberg, but this is and Trader Summit. This is a situation where if the dollar continues to weaken, especially following the inflation data, I told him it might be a canary in the coal mine. A lot of times the dollar Canadian tends to lead the moves in the FX market. And if it's already got a head start and we do see weak inflation data come Thursday of this next week, that could really play out to the downside. Speaking of Thursday, and this is my last currency pair, and then I got to show you a couple of other quick things really fast before I let you go. Let's take a look at the dollar Mexican peso. So you guys know I've been very, very bullish the peso in the last several months. I think that, and I said this on the week ahead videos, I've said it on many occasions, that the dollar Mexican peso is going to eventually drop down towards the teens. I feel that overarchingly that Mexico is really going to benefit in this next global business cycle, and I think that the dollar Mex is going to be a great trade, not only from a trading technical perspective, but also from a macro perspective, and also it's going to you get a substantial carry when you're holding Mexican pesos over dollars, over euros, over most other, G7 currencies. So keep an eye on the dollar MEX. I think it's going to be really important, not only because if inflation data comes out weak, guess what? We're probably going to take out this support in the dollar MEX. You're going to see a rally in equities. But more importantly is we have Banxico's meeting on Thursday after the inflation data several hours later. So we're going to see the result of the inflation data, and then Banxico right after that. And you can end up getting a double whammy. Double whammy in how? Well, first of all, you can see a massive breakdown over the course of the next several weeks. I think that the dollar MEX is primed to break down. The flip side is, let's say the inflation data is still hot and Banxico ends up being a little bit more dovish. You could actually get a big pivot off of this massive support. So, we are a very critical area for the dollar Mexican peso, and I think it sets up in either direction. Not saying, me personally, I'm leaning towards being short the dollar Mexican peso. However, I am very cognizant of this huge support level that we face that has been holding us since the beginning of 2021. All right, a couple other things I wanted to cover. Gold. This is the chart that you're very familiar with. You've seen this chart because I've drawn it here. But if you take this trend line right here, and depending on how you draw it, if you draw it like that, you draw it like this, you connect some of the other highs. Maybe you see this one's an aberration, and we connect all these other highs. We're breaking out. But more importantly, we're breaking previous support. Previous support, previous support, previous support, previous support, previous or current resistance, right? Current resistance, and we broke above it. We broke previous highs. So now we're making higher or consistent lows. You can see it right here, right? Consistent lows. Now you're making higher highs, and you've had relative strength that has been divergent the entire time. That suggests that this breakout is going back up towards the 1720 and maybe even higher than that, depending on what happens with inflation and what happens with the dollar and what happens with yields. Gold has the potential to really make a stand here and move back towards the mid 1700 levels, maybe even as high as 1800, where the 200-day moving average is, if everything else falls into place. But I think gold is a really big setup. You should take a look at the outperformance in silver as well. But we're not going to do that today, because what we're going to do is we're going to take a look at crude oil. Crude oil had a massive breakout. Biden, he wanted $70 crude. Looks like he's going to get $100 crude first. I know if you follow me via social media, you heard me say that a couple of weeks ago. Well, now we've broken a descending channel, and to be completely frank here, it looks like it's going to break through this resistance and make it right back to the 200-day moving average, where 100 is very close to. So watch this move in crude, because that will also feed into the Canadian dollar, the US dollar, Canadian dollar, probably weakness, as the Canadian dollar will strengthen with crude oil prices as well. But guys and gals, look, my ideas are fresh each and every morning, but they're not just me. It's with our team at the Forex Analytics team. So come join us Monday mornings. You can join us on the Flow Show if you want an update during European hours. If you're in North America, you want an update during North American hours, come join us for the free F.A.C.E show. And Dale Pinkert, our esteemed host, he interviews traders, economists, analysts, those guys and gals that you see on TV all the time. He'll sit down with them for 30 minutes, really pick their brain, and it's free for you each and every day. So come join us there. My name is Blake Morrow. If you love this video, make sure you give me a thumbs up. Give a thumbs up to the team. Give a thumbs up for Steve and his family for visiting Arizona and the United States and making it home safely. I'll see you guys on Monday morning. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.